Okay. Oliver Adam Limited, Waste Management and Recycling. Fantastic. You're welcome. You're welcome. So please want to see more of that. Elizabeth is Elizabeth of Lizzie Gold Nigeria Enterprises into sales, installation, maintenance, and repair of diesel generators. Ah, wow, wow, wow. Wonderful, wonderful businesses here. Interesting. You're all welcome. You are all welcome. Today's webinar promises to be very enlightening, and there are things that we as business owners need to know. So we'll get into it in another few minutes. But in the meantime, please introduce yourself in the chat box, your name, your company name, what you do. Atinuke is a hotelier. Thank you, thank you, thank you, thank you, thank you. Well done, everyone. Well done, everyone. Okay, good morning once again. You are all welcome to this webinar, and I would like to get into the thick of things. It's so good to see everyone here today, and we ask that you introduce yourself in the chat so that other participants can, see what you do, who you are, and all of that. So today, we're going to be talking about several things that relate to taking charge of our business finances, and we're all business owners here, good enough. And it's interesting to know that in managing your business, you really can't say, oh, I'm not good with numbers. Well, every business owner, you need to have some knowledge about numbers, even if you're not the one doing it yourself. even if you have somebody whose job it is to put all the little details together, you need to be able to understand what that person is doing. Because for all you know, the person might not even be as competent as they say they are. But if you didn't know the right questions to ask, you wouldn't know whether that person has been deceiving you all along. So today's webinar is supposed to expose us to certain things that we as business owners need to be on top of. Now, Warren Buffett is popularly known to say that accounting is the language of business. Yes, because everything you do in business at the end of the day is going to come down to you being able to measure it in terms of numbers. Okay, so if you say your business has been good, how good? Okay, this year versus last year, what did you do? Was it in terms of revenue? You made 1 million last year, this year you're able to generate 2 million. You need to ostensibly be able to put everything in terms of numbers. So today we're going to be looking at a few things. It's not supposed to turn you into an accountant, no, but it's supposed to make you more alert to what is going on in your business, and then ultimately be able to go over those decisions you've made over time and see those ones you need to course correct, the adjustments you need to make, the actions you need to take. All of that we expect will happen after your interaction in this session today. And so we've broken it down into like 4 broad categories, looking at transaction tracking and filing. We're going to be looking at target profit and some pricing implications, as well as cash flow management, being able to juxtapose between cash flow and profit. And we hope that at the end of the session, you will be very, very much satisfied with interacting with us today. So I'll go ahead and introduce myself. My name is Jovita Madojemo. Yes, I am a businesswoman, a chartered accountant, certified with the ACCA, that is the Association of Chartered Certified Accountants. I am the founder of Pundit Bookkeeping Services Limited. We are a company that work with small and mid-sized business owners who are interested in tracking their business performance with professionally prepared books of accounts. I started my career in 2006 working as an accounting trainee in the mid-sized accounting and audit firm called Beckley Roberts and Co. So here's the interesting thing. 16 years later, I'm doing this webinar and I actually have someone who is going to be answering questions on tax later, and she's Abigail. They came from this same Beckley Roberts and Co. So you see, we don't burn bridges where I come from, So yeah, so that's where that's where I cut my teeth in terms of accounting. And then in 2008, I made a small, will I say, diversion. I went into banking, and there I worked first as SME banker in Diamond Bank for about 5 years. And in the 6th year, I was transferred to the head office to be the sales and marketing manager cards, in the cards unit of Diamond Bank PLC. In 2016, I launched out on my own, to start Pundit. And we're here, I mean, going on 5 years plus later, and it's been a very enlightening and fulfilling experience. So Pundit, I mean, we've worked with several businesses, even not for profits, ranging in annual turnover from 10 million a year to those who are recording over 600 million a year. In March 2019, Jovita, I was recognized by Business Day as one of Nigeria's 50 most inspiring women. That's something we are most proud of at Pundit. Okay, so that's me introducing myself and where I've been and what I've done. And we will now get into the session proper. Now, these are rhetorical questions. I mean, I don't expect that you might have all the answers to these questions, but there are things to think about. And the first thing is, how do you notify customers of the service they have rendered or the products they have sold? Okay, how do you do that? Because in talking about tracking your transactions, you need to come down to some of these fine details. So when someone uses your service or your product, how are they notified? That's question number 1 for you to think about. Number 2 is, how do you track payments made by customers? Okay, do you issue anything to them when they pay? All right, do you record it somewhere? What happens when that transaction takes place, when there's a payment from a customer. Now, this interesting question is the one that I have seen many business owners run foul of. So do you have a dedicated bank account for your business? Now, there are two ways to look at this. One way is the business account open in your business name? That's number one. Okay. And why is this important? Because somewhere along the line, you never really know. You just might need funds for expanding your business. And it's very popular for us to say, oh, banks are not giving money. Thank God I worked in a bank for some years, and we did give out money, but you see, there were things we would watch out for. And one of it was whether all your transactions had passed through the bank account. So some people shortchange themselves and want to be able to do some transactions outside of the bank account and some transactions in the bank account. But we will not be able to fully assess you if we do not see all the transactions going through your bank account. So if you've done 10 million in sales, according to you, but we've only seen 1 million in sales in your bank account, we will be giving you a loan on the basis of that 1 million. And so where you would have been able to collect so much more, you have already shortchanged yourself. So that's one thing you need to be able to do. Ensure that all your transactions are going through your bank account. That's one in terms of dedication. The second thing is, are you running personal transactions through these business accounts? What do I mean by personal transactions? Okay, someone calls you from the village, hey, Nkechi needs money to do for school. You move the money right out of your business account straight to Nkechi's mother. That's not a business transaction, okay? Or some other thing. Maybe you need to pay for your gym club. You move it out of the business account into the gym account. That's not a business transaction, and somewhere down the line, we'll begin to look at how you as a business owner need to be able to identify what your survival budget is, and then accumulate all those things and send it to yourself as a salary. Okay, so all those obligations from your friends and family should have come out of your own personal account and not the business account. All right, so your business account needs to be dedicated for business. It should be open in the name of your business, and then you should ensure that all the business transactions go through the bank account. So sometimes some people say, what if I collect cash? Yes, if you collect cash, then go and bank it. If you cannot bank it same day because it came in at the close of business, then first thing in the morning, have a process whereby somebody is responsible for banking all the cash sales collected. You fill out a teller. You can even go, a bit more detailed and put the date of the sale. So today is 31st. I'm going to the bank early this morning. I'll write sales 30/03/21 in the narration field, so that if I was looking at your bank statement, I know exactly what that deposit was for. So that is how it should be. There should be proper dedicated bank account. All your sales should go through the bank account, and only business transactions should come out of that bank account. So I'm going to say, if you have questions, just note them down. At some point, I will pause, and then Abigail will help me read out some of those questions, and we'll see how we can tackle them. All right, but going on, these are some of the things you need to be looking at. So transaction tracking and filing. We say keeping source documents is the first important action in mastering your business account. So if you want to take charge of your business finances, have source documents. What do we mean by source documents? They are the documents that indicate the transaction that is going on. So for instance, invoices. And here, please pay attention, because somehow we have tried to interchange invoices and receipts. We use them interchangeably, but they are two separate documents. So an invoice is issued to a customer when a service is rendered or an item is purchased. Okay, so if I am selling groceries, I should issue an invoice that says the groceries have been delivered to the customer or have sold those groceries. And then when the customer pays, the next thing, that's when you issue a receipt. So a receipt is an evidence of cash collected. All right, and sometimes the customer might even pay you in advance. If he pays you in advance, you still issue a receipt. When you deliver the product or service, you issue an invoice. So they are two separate documents. An invoice, when a service is rendered or an item is purchased, and then a receipt issued when cash has been collected. All right. Now, the third one I want to highlight is payment vouchers. Okay, now these are used to narrate business expenses incurred and also to get necessary approvals for such expenses. When you give the office assistant money to buy fuel, for instance, it shouldn't just be between you and her that money has changed hands. There should be a document, all right? And we will see like a little image of what the payment voucher looks like later on. You see, there should be that document that shows the date the money was given, the amount that was given out, the purpose for the expense. It will be narrated: money for fuel for generator, or for fuel for vehicle, or internet for the office, or transport to Agege. It must be documented there in that document, and then the amount, and then the person who received the money signs for it. And then imagine that she went to the filling station to buy fuel. They should issue her a receipt. All she had to do was ask that it's for company, and then she will come back to the office and staple that fuel receipt on the payment voucher. So it's there as an evidence that the transaction has taken place. So you don't need to begin to crack your head at the end of the day. Where did all our money go to? Before maybe you have your profit and loss account prepared, you would have looked at your payment voucher and see, oh, okay, this is what we've been doing with all the monies. You're going through it and like, oh, all right, I see. Because sometimes I interact with business owners and I'm like, I don't know where the money went, but if you were able to keep this source document, in this case, the payment voucher, you will see how you have used money in the business. Okay, so additionally, we were trying to emphasize that it is important for you to keep separate files, for the different transactions that take place in your business. So what it means is that there needs to be some orderliness to how you interact in your business. It's not enough to say that, oh, I'm small. Now, every big business started small, okay, but there were certain actions, certain processes, certain details that were put in place so that as they began to grow, people could adapt those things, and then it was now very possible for them to know clearly how their business is faring. But if everything you do is just a mass of jumbles, you probably have one drawer where you just dump everything. You'll never be able to really see at a glance how you are doing as a business. So we're saying here, keep separate files, even for your invoices, your receipts, your expense receipts. When you purchase assets, in the tables, the chairs, the fans, the generator that you purchase, have its own file, so that you can easily go back and see, okay, this is what our asset looks like. This is the date we bought them. This was the value at the time we bought them, and all of that information. When you buy inventory, so you selling food items, you should be able to have a file that tracks how you have been spending over time. You can always go back to cross-reference to tell how expensive it was then versus now, and make certain decisions because you have information available to you. Okay, also have a separate file for your taxes. In fact, for taxes, because we have both FIRS and LIRS, that's the federal and the state, you should have separate for the two, so that whichever one calls upon you to say, oh, there's an inquiry or whatever, you can go back and bring out all the payments that you have paid in respect of taxes from those files. So filing is also a very integral part of coordinating your business finances and ensuring that there is order in what you are doing as a business owner. So remember, every action you take in business, ultimately comes down to, in this part of the world, naira and kobo or dollars or whichever currency you are using, and those things need to be properly tracked. Additionally, we usually encourage, but for those people doing transfers for payments, take advantage of your mobile banking or your online banking, for instance, so that you can control the narrations. So imagine that I said to you, maybe Abe, you've been in business for a while now, you've not kept proper accounting. I can't tell you at a glance what your revenue is. Let me come and write up your books of accounts, and then you send me your bank statement. I'll be seeing different people's names. I don't know what those names represent. But imagine that there were narrations, for instance. So you transferred money to Femi, and then you had put a narration. Maybe it was for diesel purchase for the office. So we know that that money is for diesel. Or you put another amount saying payment for digital marketing. You put another amount and there's a narration. So you need to be able to use those narrations consistently. That way, it also reduces the questions your accountant will be asking you back and forth. So in addition to those payment vouchers, also try to have clear narrations when you initiate transfers so that when those bank statements are generated, it is very evident what the monies have been used for and vice versa. Okay, so here we see a sample invoice. Okay, so this is a sample of an invoice, and we emphasize again that the invoice is an evidence of that the sale has occurred. It is not a proof of payment. It is not a proof of payment. On this next one, this is the sample receipt, and it doesn't have to look like this exactly, but the important things are there: who collected the money, the amount, what date. Okay, so a receipt is issued when payment is received for the sales transaction that occurred. Is also issued if a customer pays in advance of a transaction. So these are the source documents that we have talked about earlier. Okay, now this is a sample payment voucher. So you can see who it was paid to, if there was a check that accompanied that payment, the check number is there. If they are settling an invoice, the invoice is cross-referenced, okay? And then you can see all the approved by the accountant who received it. So it's an evidence of the transaction that has taken place. Okay, so before I move into the next session, I want to know whether we have some questions. Can we have, if you have any question, you can just type it in the chat box based on what we've said so far, and we could take that. Any question? Abigail, please help me check if there are questions in the chat box so you could read them out and I could address them. Any?
For now, no.
For now, no. Okay, thank you. So if you do have questions, you can always put it in the chat box. Abigail will take note and then we'll discuss them later. Okay, so now we're going to get into an interesting part. And please, I would like to encourage us because here I want us to practice something. So we'll be calling for answers to a certain illustration that breaks down this particular part. So we're looking at gross profit versus net profit. Now, in your business, okay, you are doing business because you want to be able to make profits. Now, yes, you want to be able to create customers, but you can't keep customers at a loss. If you keep making losses, then ultimately you will be out of business. So the question now is, how do I know what is my profit? So we in this place, we try to show you that there are two types of profits or two levels to profits, whichever one you want to go with. And the first is gross profits, and the next level is net profits. And like I said, there's an illustration, that we will use to break this down further. But let's look at the concept. So gross profit, which I say is like your first level of profit, is your sales minus your cost of sales. Okay, so sales is that you sold something to a customer and you received money for it, right? Or there is an invoice showing that, okay, that customer needs to give you an amount of money for the item he has collected or the service that you have rendered. So that's sales. Now, what's cost of sales or direct cost? Now, for those who are selling physical items, it's pretty easy. If I buy a bag for 5,000 naira for the purpose of reselling it to my customer, then 5,000 naira is my cost of sale. Okay, so if I sell it for 10,000 naira, 10,000 naira is my sales. What's my gross profit? My gross profit will be 5,000 naira. But that's not my final profit. That's not my final profit. Okay. So the final profit is after I have removed all my overheads from my gross profit, then I will get my net profit. So here we said overheads, which is also the same thing as indirect cost, are those costs that you must incur them whether you generate revenue or not. So for instance, those of you who have office space, the landlord is not interested on whether you only sold 5 items. You have to pay rent. Okay, so it's not a function of sales. So even your staff, those ones that are, that you must pay month on month, whether the business generates sales or not, that's also overhead. And there's so many other overheads, like fuel for your generator, transportation to move up and down, and then fuel for your vehicle and all of those things, they become overhead. So it is after you've deducted your overhead from your gross profit that you will now arrive at your net profit. So your net profit is your gross profit minus your overheads. Your gross profit minus your overheads will give you net profits. Okay, so gross profit is the first step, net profit is the next step. All right. Okay. Now, every financial transaction you do, is typically represented in financial statements. All right. And any transaction you do will either impact your assets, your liabilities, equity, income, or expenses. So in explaining assets in a very simple way, all right, there are those items that the business owns. They belong to the business and they are used to generate income for the business. So they could be current assets or non-current assets, okay? So when you are giving examples of current assets, you're looking at cash, and then any other item that can easily be converted to cash within a 1-year period. So for instance, if you have inventory, that's also a current asset. Okay, if you have prepayments, that means you maybe paid for a service in advance, that's still an asset because it's your money with someone else. Okay, and then if you have money in fixed deposits, that is also a current asset for the business, right? So for non-current assets, those are the ones that are, they last a longer period. So things like your furniture and fittings, your generator, which is like plant and equipment, okay, your computers used in the office, all those fall under your asset category. Your liabilities, on the other hand, are those things that your business is owing to others. And in the same way, they can be long-term and they can be current, okay, current or non-current. So current will mean that those liabilities need to be settled within a 1-year period. So for instance, if you have a bank overdraft, it's typically settled within a 1-year period. So that becomes your current liability, all right? If you have a short-term loan, a term loan as it's called sometimes in the bank, that's also a current liability. But then if you have like a lease finance facility, maybe for a vehicle or for a generator that you need to repay back in 2-3 years, that becomes a non-current liability, okay? And then equity is talking about the monies that you have injected in the business or the monies you received from your investors that are not loans, okay? Those become equity. Income, of course, is the same as sales, or any other monies that came into the business, maybe not necessarily sales. For instance, if maybe you disposed of an asset and the money came in, that's an income, all right? If you sold one of your assets, maybe because you don't want to use it anymore, it becomes an income to the business. Expenses, yes, all those things that you are paying to operate the business. So all your salaries, fuel, diesel, internet, okay? All those things become your expenses, delivery expenses, all of that is expenses. Now, if I bought a table and a chair, yes, it's money going out, but it's not going to be put under expenses, it will go towards assets. So that's where the distinction comes in. Moving on, we see here what a statement of profit or loss looks like. So what are we trying to say? Everything you have done in your business at the end of the day, you should be able to measure the performance. So this here is showing the performance of a business, okay? And the question will now be to you, and like I said, some of these questions are rhetorical. Okay, this one is, at the end of a period, do you actually see something like this to show how you have done, or is everything just, you just have several pieces of information written down in your notebooks? Okay, so if you were to come to me and I want to be a part of your business and I tell you how is your business doing, it's not enough for you to tell me very interesting stories about how, oh, we're doing great, we're doing great. I would like to see something that shows me how great you are doing. So this is a statement of profit or loss, and it typically captures just the income and expenses. So this is a simple example, KYC Enterprises. Now, if you watch very closely here, you can see that for this month, they have done 1.2 million, and it looks very wonderful, right? But look at the net profit, oh, 13,150. You see what we're talking about? So earlier we looked at the distinction between gross profit and net profit, and we said that gross profit was the sales minus the cost of sales. So here, gross profit is looking good, 620,000. But look at the net profit, 13,000. Ah, this tells me that this business needs a lot of resuscitation, or they just need to think through what is going on. And what are the culprits? You can see all the different expenses they've made that gulped up the money from sales and led to just 13,000. Now, if this guy was looking at his sales in isolation, he'll be jubilating that he's doing well. 1.2 million in a month. If he does an average of this monthly, it means that he's doing 14.4 million in a year, right? Meanwhile, his net profit for the year will just be about maybe 100 and maybe 40,000 naira for a full year after making 14.4 million, you know, which is even less than 10%. So he's doing about 1% net profits versus his sales. Okay, and these are the things that you as a business owner needs to begin to look at. So he spent on internet, transport, salaries. You can see salary is also very huge, 275 monthly, based, I mean, compared to his sales, you know. Fuel and diesel is also gulping a lot, 102,250 monthly. Wow. Then his rent is 150,000 monthly by the time he amortizes it. That means in a year, he spends 1.8 million in rent. So the question he will be asking himself, you know, if I was this business owner, is do I need to really spend 1.8 million in this place? Can't I look for somewhere maybe where the rent is 600,000? That way, my monthly amortization of rent or my monthly rent charge to my profit and loss will just be 50,000. And then I would have retained more in terms of net profit. So that's what this does for the business owner. You can see at a glance what exactly your business is doing. Because if all I was doing was just recording my sales, I will be happy. Oh, 1.2 million sales. But hey, look at all of it has been gulped up. And at the end, I only have 13,000 naira. Not 13.30, 13,000 naira versus 1.2 million. So it means that the learning point here will be that you cannot look at sales in isolation as a business owner. You can't start your jubilation based on sales alone. You need to bring in all the different elements together to be able to see exactly what you need to be doing and what changes need to make. So in this illustration, a clear change needs to be made. This rent, it probably needs to get somewhere cheaper. Fuel and diesel, maybe he needs to see how he can get an inverter, you know, or something, so that this monthly expense reduces. Because if he does this monthly, he's showing that he's probably going to spend 1.2 million in a full year on fuel and diesel. Okay, so these are considerations the business owner would need to be looking at. And the only way he could do that was to get something like this at a glance, which we call the statement of profit or loss. Now, This here is a sample balance sheet. Some of us have heard the term before, balance sheet, balance sheet. So it's the same thing as the statement of financial position. And here it captures the business owner's assets. You understand the assets, the liabilities, and equity. Those three components that we talked about earlier on. It captures it. Okay. So beautiful. In this place, we can tell what the business owns and then what the business is owing to others. All right, so right now here we can see the bank balance, which is a current asset. We can also see the inventory, which is also a current asset. Non-current assets include the plant and equipment, furniture and fittings, okay? And then they have a liability to accounts payable. Accounts payable will be his vendors. So in this place, this person sells physical items. That's why he has inventory. All right. So he's selling accounts, or rather, he's selling inventory, and then he hasn't fully paid for some inventory he had taken over time. So that's why he's owing 1.48 million. Now, when I look at this as a business owner, what does it tell me? It tells me that, hey, this cash I have in my bank account, I really can't splurge, use it to do any interesting thing. So if I got, for instance, after this 350,000 here, maybe I got an additional 500,000, I get that credit alert. And I'm very happy that I got a credit alert of 500,000. Well, I need to pause because that 500,000 is not for me to buy a ticket to Dubai. No, I need to come back here and say, okay, let's see if we can clear some of this liability, you see. But if I didn't have this statement of financial position that tells me my situation as a business, I just see that alert and then use it for what I feel like doing, which happens many times in small businesses because the information is not there to guide us, to guide our actions. So you get the credit alert and you're very happy, and it seems like, wow, yeah. Let me quickly get the ticket to travel. But hey, what about this liability here? Do you want it to be an everlasting liability? You need to see how to clear it. And that money that came in is what will be used to clear it. Okay, still talking about this statement of financial position. The inventory here, 750,000. What it tells me as a business owner is that I need to quickly convert this to cash. If I can even sell 500,000 naira of this and convert it to cash, it will help me in settling some of my liabilities. Okay, so under the equity side, we see net income, retained earnings, members' equity. And so I can just quickly explain. The members' equity is talking about the monies that I brought into the business, like let's call it the initial capital injection. Okay. Then retained earnings is the profit I made in previous years over time, right? And then my net income, this particular field here, it tracks the income I have made from the beginning of the year up until this point in this our illustration here, May 31st. Okay, so that's what the net income is. Now, all these current assets that you have represented here, they were purchased by a combination of your members' equity and your retained earnings. Okay, so which is why there's something called the accounting equation where we say asset is equals to capital plus liability. So if you see here, the total asset equal the capital and liability, 4,265,200, 4,265,200. Yes. So what does that even mean? Also breaking it down again, it means that any asset I have in business would have been funded either from liabilities if I took loan, or it would have been funded from my capital injection. So that's the simple explanation. Abigail, do we have any questions so far? Please check.
No, we don't.
No, not yet. Okay. So the question I'm asking here is, what software does your company use and what sort of reports do you get? Okay, so if you are doing business and you don't have the statement of profit or loss, or you don't have the balance sheet or statement of financial position, then how do you want to take charge of your business finances? You need them, okay? And they are simple software tools that actually help you to be able to come to this, will I say, to these results, okay? Some of them are cloud-based, meaning you need the internet to function, and some are desktop-based. So there's QuickBooks Pro, which is like a desktop version, all right? And they also have the QuickBooks Online. And then you have Sage Business Cloud Accounting, which is pretty simple for young businesses and which a number of our clients also use. So those are things you need to consider to invest in for your business. All right. Now, here we have an illustration. And please, in this part, we need answers in the chat box. If not, we'll start calling names. So we need you to participate in this because that tells us that you're getting the concept. So here, we say, how do enterprises sell laptops? And the cost price for each laptop is 120,000 Naira. That's the cost price. They sell each laptop for 180,000 per unit. The average number of units sold in a month is what? 20 laptops. Okay, now we're giving an additional information. Total overhead in a month is 700,000 Naira. So you as the business owner, you are required. Can you calculate the gross profit per unit based on this illustration? Can you also calculate the monthly gross profits? Okay. You also need to calculate the monthly net profits and then the net profit per unit. And then tell us whether Audu will make a net profit or a loss if his overheads increase to 1.3 million per month. So this is the question, and we all need to try wherever you are, figure it out, put your answers in the chat box. So if you are telling me gross profit per unit, so type gross profit per unit, put the figure you think it is. If it is monthly gross profit, put the figure you think it is. Okay, so let me remind you again that your gross profit is sales minus your cost of sales. And your net profit will be your gross profit minus your overheads. Sales minus cost of sales gives you gross profit. Net profit minus gross profit gives you what? Overheads. So use that and attempt this illustration. We're waiting for your answers. Thank you, thank you, thank you. We want to see you participate. That will tell us that you've gotten the concept. If not, it will mean that we've just been talking and nothing has been gained. So we're waiting for the answers. Okay, this is the part where I start calling names. I think I can see some names here. So Elizabeth Ogushino, we want to see your answer. No prize is given, so just try. Eluwe John, give us an answer. Felicia, give us an answer. Atinuke, give us an answer. We want to see your answers, just try. Okay. Okay, I'm seeing someone saying, can you kindly list the software to be used? Okay, Elizabeth. So yeah, you can use QuickBooks, you can use Sage Business Cloud. Those are the two we've used over the years, and we know that they are reliable, stable, and they've worked for different clients. Yes. Okay. Is Uche Igwe still here? Uche, it would be nice to see your answer in the chat box. Yes. So we're waiting. You might not have the answers to all, but try one. There's a simple one, the gross profit per unit. What's that? The selling price of the laptop minus the cost price. So let's see what your answer is before I go and show you the answers. Okay. Okay. Atinuke, thank you. Uche, thank you. I can see your answers. Yes, yes. It's 60,000 Naira. That's the gross profit. Okay. So Audu cannot just be rejoicing right now, saying that he makes 60,000 Naira on each laptop, because that's not what he's making. That's just his gross profit. Okay, so if somebody else can just try and tell us what his net profit per unit is, just follow the steps. Okay, so maybe I should help you out in giving you the steps to arrive at the answer. So since we know that the cost price for each laptop is 120 and the selling price is 180,000, so like Atinuke and Uche have told us, the gross profit per unit is actually what, 60,000 naira. That's very correct. Very, very correct. So in a month, what will be the total gross profit? It will be that 60,000 naira times the 20 laptops he sells in a month. Okay, so the 60,000 naira times the 20 laptops, that will be his gross profit for the full month. Okay, remember we are trying to arrive at net profit now. So net profit, like we said, is gross profit minus overheads. So if gross profit per unit is 60,000 times 20 laptops, what would that give us? Let me see what we have in the chart. Okay, I can see the chart. Wow, wow, wow. Uche, are you an accountant? This is interesting. Oh. Elizabeth, thank you. Yes, net profit is 500,000, meaning net profit per unit is what? 25,000 naira. Thank you, Uche Igwe. Thank you, Elizabeth. Thank you so much. Thank you, Onyekachi. Thank you for the answers. Beautiful, beautiful. Let's all try it, to see if we get it. That way we'll know whether we're getting this concept. So really, if you have to ask Aldo, what do you make on each laptop? Based on the fact that 20 is what he sells averagely. What he's making is 25,000 naira, is not the 60,000 naira that we first mentioned. That's just his gross profit. So for him to know what he's making per laptop, he must bring in the overheads. So this is a simple illustration. We need to take it back to our businesses and try and adapt it to our own unique situation. But if we get the principle, it's very easy for us to translate it to our own peculiar circumstance. Right. So beautiful answers. I'm really grateful for that participation. It shows that we're really getting this. So yes, so monthly net profit is 500,000 and the net profit per unit is actually 25,000 naira. So will Aldo make a loss if his overhead now is no longer 700,000, but is now 1.3 million? Yes, he will make a huge loss of 100,000 naira. So you see, this is how losses are made. Losses are not made by accident, right? They are a function of the activities going on in your business. Your revenue must be able to cover all of your expenses for you to now be able to make a profit. That's the simple logic behind it. So when people are coming to you as a business wanting to spend, you must pause and think, okay, can we accommodate this? Can we cover this? That's for you to do. Maybe you need to pause and pace the spending, postpone the spending to a later time when you have the revenue to cover it. Otherwise, it means that, okay, you will need to borrow to get that thing done if it is such an emergency, because yes, we know that emergencies happen in business, but you cannot be in a state of emergency every day of your business. It means that you really don't know what you are doing, but emergencies can happen and they are few and far between, so they are not an everyday occurrence, right? But to manage your everyday activity, you need to ensure that you are spending less than you are receiving so that you can begin to accumulate profit as a business. And so maybe I should just say here, why do you need to accumulate profit as a business? Because the profit you accumulate as a business is what is going to help you fund your expansion in the future. So if you wanted to open a new store, instead of you borrowing, and nobody's saying borrowing is bad, but we are saying that you could actually spare yourself some of the headaches if you were disciplined enough to manage your business in such a way that you are accumulating profit over time. So I want to open a new store. I go into our reserves based on the profits that we've made over time, and I'm able to do all the pay for the lease, do the renovations. Boom, new store open because the business has made profit over time, right? So that's why you need to accumulate profit as a business, net profits. Great, great. So thank you so much for all of that contribution. Yes, so we have all the answers, and we will emphasize again, never look at sales in isolation. The bottom line is critical. So this one is a service business, and maybe I'll just walk you through it, okay? But please feel free to also put the answers in the chat box, right? Innovate Media. Now, this is a service business, like I said, they are not selling physical items. So if you're into service, you need to pay attention here. Innovate Media is into sound production. Like, so when we say sound production, events, they are the ones responsible for the microphones, the speakers, all of that. Okay, so they pay a 20% finder's fee, which is also known as a commission for each business that their agent brings. So this guy, probably he's very good with the sound, but he's not very good at bringing in clients. So he has an agent that goes to all the entertainment companies and then pitches Innovate Media, and then Innovate Media gets the job. So his arrangement with Innovate Media is that for each job that I bring to you, you give me 20% of the top. So 20% of the revenue, you give it to me. And they're like, good to go. I don't mind, right? Because it's not an overhead. It's a function of revenue. If you don't bring me any sales, I don't give you any commission. But when you give me sales, I give you commission. So perfect arrangement for them, right? So their total revenue in a month is 1.2 million, and their monthly overhead is 650,000 naira. Now you are given an additional information that tells you that the total revenue that they generated in that month was generated by their agents. So what's that trying to tell you? That all of this 1.2 million will be subject to a 20% what commission. Now, what is commission in this place? Is it an overhead or is it a direct cost, which we also know as cost of sales? Okay, so the commission in this our illustration is actually a direct cost. It's not an overhead. And why is that? Because if there is no sales, we will not be making this expense. Just to make the distinction again between overhead and direct cost. Okay, so here we want to know the monthly gross profit. We want to know the monthly net profit. All right, will Innovate Media make a net profit or loss if overheads increase to 800,000 per month? And how much net profit or loss will be made? Great. So is anybody giving us an answer? If you don't know number one, maybe you might know number two. Well, it's impossible. If you don't know number one, you won't know number two. So let's try number one. Let's try number one. Okay, I see. Okay. Okay, Matthew will attend to your request later. So Aki, if you're in the background, he's asking us how he can get the recorded video clips. Don't worry, maybe you watch our social media page. We'll probably put up something there for you. Yeah, or you can go back to YouTube. Okay, at the end, we'll share the YouTube or whatever so that you can replay it. Okay. Okay, Chisom, don't worry, we've got you. But in the meantime, Chisom, give us an answer. Chisom, give us an answer. Give us an answer. Monthly gross profit. I want to know that we're all getting something out of this. You know, that way we can have, you know, businesses run with more information and, you know, we call it financial intelligence. Fantastic. So, okay, so monthly gross profits. I'll wait for another 30 seconds before I give the answer. Monthly gross profit for Innovate Media. Okay, maybe the percentage is the one giving you a problem, right? So let me just help you. 20% of 1.2 million is actually 240,000. So now you know what the cost of sales is. Aya, give us gross profit. Give us the gross profit. If direct cost is 240,000, what is the net profit? We are waiting. My champions, thank you, thank you. I'm seeing some interesting things. Great, great. Chisom, yes, yes. Sonia, thank you very much. Yes, Sonia, thank you. 960,000 is the gross profit. Okay, Elizabeth, you can't read the screen. Sorry, maybe that's network. Sorry about that. Sorry about that. That will be a network challenge. Sorry about that. Okay. Okay. Great. Yes, Uche, you're correct. And Sonia, you're correct again. Net profit is 310,000. Fantastic. So that's the principle of people, you know. Gross profit is your sales minus your cost of sales. And then net profit will be the gross profit minus your overhead. So it's important that as a business owner, you must constantly be tracking what your overheads are. If not, you just be carried away with sales. Okay. If the overhead increases to 800,000, yes, they will still make a profit, but it will be a smaller profit. Instead of it to be 310,000, it will now be what, about 110,000, I think. Let's see what somebody is saying. Yeah. Okay, 160,000. Yes, thank you, thank you, thank you, thank you, thank you. Fantastic. Thank you, thank you. So I see that we're really interested in getting like the video or the clip. That means we really want to, okay, not a problem. We'll make it available. We'll make it available, don't worry. But in the meantime, follow. That doesn't mean you won't follow, because if you are watching it now again and I don't know. But follow, let's participate. Thank you so much. So I'm very happy about the answers. We are actually following. This is beautiful. This is beautiful. So when we even get the videos, I think we should share with all those of our friends in business. They need to see it, because they might not open up to you and tell you that they are struggling with this thing. So just send it to them and let them be enlightened as well. Well, I mean, we're all in this business thing together. So if we can share the information, all the better. Okay. So that's it. Remember again, never look at sales in isolation. The bottom line is critical. Thank you so much. Wow, wow, wow. Okay. So my talk is gradually coming down small, small. We're not going to keep you here for too long, but just bear with us. Let me push out as much as I can push out, and then so that you can go about the rest of your day. Now, this illustration we have here is not technical, but because you are seeing too much information, it's possible that you just close your eyes right now and say, nah, Jovita, thank you, I'm not doing it. But just follow it gradually. It's very simple. Okay. Now, as a business owner, I believe that it's important for you to measure performance, right? Now, measuring performance does something for you. It actually gives purpose to your activities. So you're not just going to the shop every day because you want somewhere to go to, right? But you are going there because there is something to be achieved and you want to constantly do better than your previous self. But if you didn't measure, you wouldn't even know what your previous performance was and what to do to be better than where you were before. Okay? So every business owner, I believe strongly, should have goals in measurable terms. So it's not enough to say, want to do better this year. How much better, right? So if you knew last year that you were doing 1 million in net profit, the question you'll be asking yourself is, what do I need to do to make 5 million naira net profit this year? That's a question to ask yourself as a business owner. And if you've not been asking before, maybe you're just doing, let's see how it goes. No, you should. It is not the end of the world if you don't meet it, but you have something that you are pursuing, and then you can see those actions that you should have taken or you didn't take, and then make corrections, so that ultimately as you go along, you become better as a business owner that delivers in terms of results, and which is what drives a number of big organizations. So, I mean, we've had friends in banks who are like, hey, this target. Yeah, sometimes maybe the target is unrealistic, but the concept of targets as a whole is not a bad concept. It drives behavior. It eliminates time-wasting activities, because you know that, oh, this particular thing is not going to give me my end result, so I might as well just switch activity and do the thing that will give me the result that we are looking to get. So in this illustration, we have Shola Enterprises. They want to sell 3,000 units of fabric in a year. Rather, they currently, not that they want to. So currently, so like I said, you need to know your current before you know where you want to get to. Okay, so they currently sell 3,000 units of fabric in a year at a selling price of 4,000 naira per unit. So keep that information somewhere. Now, you know, in primary school, we used to do word problems. Yes, I have come to remind you of that time. The next sentence says their selling price is 2 times the cost price of each unit of fabric. So if selling price is 4,000 naira, and I know that this is 2 times what the cost price is, it simply tells me that my cost price is 2,000 naira. So hold that information somewhere. Selling price is 4,000 naira, cost price is 2,000 naira per unit. So what it even means, even though it's not written here, is that gross profit per unit is also what? 2,000 naira. How do we know that? Because we know that selling price minus cost price is equals to gross profit. So 4,000 per unit selling price, cost price is 2,000 naira, because we have been told that their selling price is 2 times the cost of each unit of fabric. Now, this is where we are going to their dream, that, or you call it their desire, or you call it their target, or you call it their goal, is to make 10 million naira net profit per year. That's what they want to make. Whether they make it is another thing entirely. But you see, they've given purpose to what their future activities will be. And they are saying, how many units of fabric will they need to sell in order to actualize this dream if they are unable to increase selling price per unit? Now, why would they be unable to increase selling price? Is a function of the kind of market they play in, right? So they know that their customers, or rather the market might already be saturated, and selling price is actually a function of the customer's dictation. So they cannot tinker with their selling price, they can't increase it. So it means they have to now play the volume game, which is why they're asking you how many units of fabric will they need to sell to actualize this dream if they cannot increase selling price per unit. Now, we've been giving some other information that will help us advise them. Okay, their overheads in a year: shop rent 1.2 million, salaries 2.4 million a year, and then their other operating cost in a year is 1.2 million. Okay, so again, we emphasize that you need to know where you are in trying to plan for where you want to be. That has come to play in this illustration. Okay, so the question again that we need to answer here is, how many units of fabrics will Shola Enterprises need to sell in order to make 10 million net profit a year? So who are the geniuses that are going to help us? Who are the geniuses? I need to see us trying to do this. Let's try. Let us try. Okay, so where do you begin? Since we've seen too much information now, and probably NEPA is taking light in our head. No, it's not that complex. It's not that complex. So stay with me, okay? We'll go back to our formula, right? Which is sales minus cost price, or cost of sales, equals to gross profit. And gross profit minus overheads is equals to what? Net profit. In this case, now we've been told what the net profit is. So we have 10 million naira net profit, right? We've been told what the overhead is. If you add 1.2 million to 2.4 million and to another 1.2 million, it means that in a year, their overhead is what? 4.8 million. Isn't that right? Okay, so if we know what that is, it means that the gross profit that will give them 10 million naira is what? What will it be? What will it be? It will be an amount higher than the overhead that will give us 10 million naira. So I hope we are still following. Let's think, oh, even though I can't hear you, but I want to hear your heads thinking, okay? I want to hear your heads thinking through this. Yes, so 4.8 million is overhead, net profit is 10 million. It means that what? Gross profit should be what? 14.8 million. Because if I do 14.8 million minus 4.8, I will get what? 10 million. Okay, that is you walking backwards to try and get to where we want to know the number of fabrics she needs to sell. That's what she needs from us. How many fabrics will she need to sell? Okay. I'm trying to see if there are answers in the chat box. Uche, is this one too much? Give us an answer. You've been trying all the while. Can't see my chat box again. Abigail, please check. Is there anything in the chat?
Yes.
Okay, what do I have in the chat, please?
From Uche Igwe, he said yes. They have 2,800 units of fabric. And Elizabeth Ogunshino said we have 14.8 million.
Okay. So 2,800 is not correct. Elizabeth, 14.8 million is the gross profit. Great, but that's not the answer, right? So that's a correct element, but it's not the answer. But you're thinking, actually, we want to know the number of fabrics they need to sell. So thank you for those contributions, and I will just take you through the process. So we come here so that we can see the illustration guide. If selling price is twice the cost of sales, it means cost of each unit of fabric is what? 2,000 naira. This means that the gross profit per unit is also what? 2,000 naira. So we need to determine the gross profit for the full year and divide it by the gross profit per unit. Then we'll get the number of units to be sold in a year, right? So since we know that the net profit required is 10 million and total overhead is 4.8 million, then it means gross profit for the year will be 14.8 million. So Elizabeth, that 14.8 million you got is gross profit for the year. If you divide it by gross profit per unit, which is 2,000 naira, you will get the total number of units they need to sell, which is what? 7,400 or 400 units. So Uche, they need to sell 7,400 units. That is what they need to sell. So let me take you through the guide again, right? Or starting from the question. Shola Enterprises, they currently sell 3,000 units. That's just current information. We don't need it for what we want to do, right? They sell 3,000 units of fabric in a year at a selling price of 4,000 naira per unit. Their selling price is 2 times the cost price of each unit of fabric. Word problem. Their dream is to make 10 million naira net profit per year. How many units of fabric will they need to sell in a year to actualize this dream? If they are unable to increase selling price per unit, and I've explained why, because in some markets, the customers will take the price and then it's also saturated. If they increase it, the customers will switch, etc. Their overheads in a year are shop rent, 1.2 million, salaries, 2.4 million, operating costs, 1.2 million, which brings total overheads toward 4.8 million. So what did we say? We said if selling price is twice the cost of sales, it means cost of each unit of fabric is 2,000 naira. This means that gross profit per unit is what? 2,000 naira, because sales minus cost of sales is equals to gross profit. All right, guide number 3. So we need to determine the gross profit for the full year and divide it by the gross profit per unit. Then we will get the number of units to be sold in a year. Since we know that the net profit required is 10 million naira and total overhead is 14.8, then it means that gross profit for the year is 14.8. Why? Because if you do gross profit of 14.8 minus what? The 4.8 million, you will arrive at that what? 10 million naira. So that's fantastic, but it doesn't answer the number of units. To answer number of units, you divide the 14.8 million gross profit by the gross profit per unit, which equals to 7,400 units. So Shola Enterprises needs to sell 7,400 units of fabric in a year to actualize their net profit dream of 10 million. Ladies and gentlemen, that is the answer to the question. And so those are questions that we also need to ask ourselves as business owners. How much profit do I need to make? What do I need to sell to make this net profits? Okay, so you need to go back to your own situation, look at your own overheads, look at your own situation, and begin to, make those permutations and work towards them. So a few learning points from that illustration: if competition in your industry will not permit you to increase price, then you need to determine the target volume you need to sell to make a decent profit. In the case of Shola Enterprises, they now know that 3,000 units will not take them to the promised land. That's what they've been doing before. They now need to be selling what? 7,400 units. Okay? Now, remember also to collate your overhead element in arriving at your target revenue. All right? We were able to advise them because we knew what their overheads were. It wasn't just about the cost of fabrics. We brought in all the costs together. Now, you are also advised to review your profit or loss statement at least monthly to know whether there are significant changes in your overhead elements. And some of those significant changes might even come in the form of new staff. So meaning that your salary has increased, your salary expense rather has increased. So how does that now impact what your target profit will now be, or your target sales? That's for you to figure out because you have been reviewing. If you do not review to know what your situation is, you won't be able to plan properly. Okay, so the question now to you is, do you have control of your pricing? Have you ascertained how much you need to sell to break even or even arrive at your desired profit level? Take a moment to ascertain this. So please, maybe write it down somewhere in your notebook, the things you want to go and do after this session. If not today, maybe at the weekend, spend 1 or 2 hours, think about your business in this line and see what you can do, what changes you need to make. Okay? So now here, we're looking at cash flow versus profit. Cash flow versus profit. Cash flow versus profit, right? So typically, people will usually ask, which is better? Is it cash flow? Is it profit? Well, you need both. You need both. And what do I mean by that? I'll explain. Okay? Now, your business makes profit. We've been seeing that from the beginning. Only when your total sales is higher than your total expenses. And so your total expenses includes the cost of sales and your overheads. Great. Now you have a positive cash flow when your cash inflow exceeds your cash outflow in a period. Okay. Now, these are some of the things you need to understand because sometimes we get it mixed up. Money injected by investors into your business, it is not profit, it is a cash inflow. It is a cash inflow. Okay. Now, when an investor gives you money, in fact, I tell people that that's when your problems have just started, because you need to now turn that money into sales, and then profit. So I give you money to run your business. What are you going to do with it? Are you going to use it to buy plenty cars for yourself? Or are you going to use it to, if you are doing, if you are selling products, are you going to put it into buying more products, selling those products at a profit so that, you can continue to sustain yourself without going back to look for more investors? Okay, and then at the end of the day, can you even share a reasonable profit with your co-investors? Right? So money injected by investors into your business is not profit, it is a cash inflow. You need to now turn it to revenue and ultimately profit. The loan obtained by your business, it is not sales and therefore not profit. It is a cash inflow. So what it means is that when inflows are coming into your account, you need to understand what they are. So this money that came in right now, is it from sales or is it a loan I took from my bank? If it's a loan that I took from my bank, what am I supposed to do with this loan? How do I put it in my system in such a way that I can make a profit and repay this loan so that when this loan expires, I don't look for somebody else who will give me the money so I can repay the loan, and then I start owing that person again, and then look for someone else who will give me the money to repay that person. That's what we call robbing Peter to pay Paul, you know? So if you are fixated on cash flow, cash flow, cash flow, you need to know what's that cash flow that you have. Is it loans? If it's loans, then guy, you need to turn it into revenue and then ultimately sufficient profit so you can repay that loan and then continue to be in business without even needing the loan again at some point. Okay. Now, personal funds you loan the business is not sales and therefore it's not profit. It is what? A cash inflow. It is possible, yes, for you to make profit and be low on cash. And the reason is that you have more customers owing you than those who pay you. Now, at the point where you have rendered your service and you've invoiced, a sale is recognized. Sales is recognized. The question now is whether you have converted that sales to cash. And how will you convert it to cash? By ensuring that your customer pays you your money. So what it means is that when you are giving credit to customers, you must do it with some methodology in play. And a simple methodology is to ensure that the customer days allowed, or rather the customer credit days are lower than your own need for cash. So what do I mean? If you need to pay your own suppliers in 30 days, then please collect money from your customers in 15 days. So that by the time day 30 comes, you already have money to pay your suppliers. But if you give your customers 30 days and you also need to pay suppliers in 30 days, you've created a negative cash flow situation because in most cases, your customer will not pay on the particular due date. So your suppliers will be harassing you for money. Your customers haven't paid you. Then you probably need to go to your uncle to borrow money to pay your suppliers. So you need to be able to bring your credit days for your customers and that for your suppliers to be somewhat in sync so that you do not create a cash flow crunch or a cash flow strain for your business. Now, it's also possible for you to make losses in your business and have a lot of cash. Oh, this happens a lot. It happens a lot. So you are making losses because losses is simply sales minus your expenses, where your sales is lower than your expenses. You make a loss. But there's a lot of cash in your bank account. Why? It simply means that your expenses are not funded from sales, but from the loans and investor funds that you've collected. And so pause and think about that. Like I said earlier, when you get funds into your business, whether it's a loan, you need to understand what begins to happen. That loan needs to be repaid. And how do you repay it? You need to first convert that money to sales, right? Sales that will be higher than your expenses so that you have a net profit. And then at the end of that, when you're able to realize the net profit, you can now repay the loan and continue probably without needing an additional loan. Okay? So these are some distinctions that you need to know. So when you say which one is better, for a time, cash flow might be better. But then if all the cash you have are loans from people and you've not started generating profit, it means that your business will go under. As in the case of some companies we've seen, paying huge salaries, and then at a point, they are no longer in existence. They were paying all those salaries from loans. They weren't generating enough funds from sales to be able to meet their obligations. So you need to go back and check what's the composition of cash in your business. Is it all loans? Well, if it is, it's not for you to cry, but for you to start working hard to ensure that you are driving your sales in such a way that you can exit that loan cycle without a problem at a reasonable time. Okay, so here is a simple illustration, and not to take your time, I'll just read the illustration and then give you the answer. So it's just about understanding how to plan for cash in your business. So here, Robin Paint has an opening cash balance of 1.1 million at the beginning of June. Okay, their projected cash sales, and the only way they can project is because they've been monitoring what they've been doing over time. So they project that in June and July, they will make 1 million sales in each month that will come in as cash. And they also project that in each month of June and July as well, 1.5 million each will be spent, right? And we're asking how much cash balance will they have at the end of July. So why do you need to know this as a business owner? So that you begin to know at what point do I need to probably plan to get a loan for the business. Because the truth is that even as you do business, at some point you might need a loan. It's possible it might not be an institution you collect it from, it might be friends and family, but sometimes this thing happens. Okay, so here, because the opening balance is 1.1 million, and they're going to get an additional 2 million between June and July, we'll simply add that 2 million to the 1.1 million. That gives us what? A 3.1 million. Okay, if we deduct the 3 million we want to spend, it means that we have a cash balance of 100,000 at the end of July. A simple addition and subtraction. That's what's going on here. Okay, now it is possible that the cash sales will drop in August and expenses to be incurred will be 1.5 million. How much would they need as a loan to tie them over in August? What are their options if they do not obtain a loan? Now, from what we've seen, they will need a 1 million loan in August because they're only going to generate 400,000 and their closing balance was in July was 100,000, right? So if you had 100 to 400,000, it means they only have 500,000 to spend, and their monthly expenses usually was 1.5 million. So if they want to still cover that monthly expense of 1.5 million, they need a 1 million loan. So what we're also demonstrating here is that as a business owner, you need to also think in advance. You shouldn't constantly be in a state of surprise. Why? What do you do with your planning time? Okay, so they will need a loan in August of 1 million, and right now they're already anticipating it, so they can begin the process of approaching whoever so that in the next 2 months that money is there to cover that gap, and then in the months where things are better, they'll be able to repay. Okay, so that's dealing with your cash flow situation. Now, if there's no loan option available, it means they can only cater for only 500,000 of their planned expenses and delay the rest. So that's what happens sometimes when you see, oh, you are not able to pay salaries, you're not able to pay suppliers. It's because there's insufficient cash flow to cater for those things as a result of the timing of your own inflows. So it means that you need to bring this together in planning how your business uses cash so that at any point in time, you are able to meet your obligations. So remember what I said earlier, ensure that you turn all your sales to cash as much as possible. So even if you are giving people credit days, please inform them to repay on time, send reminders and all of that so that people can pay back quickly. Okay, so these are a few considerations. We've mentioned them. As a business owner, if you have a survival budget, don't take money out of the business whenever you feel like. No, that should stop. Plan what you need to survive and then pay that to yourself as a salary, even if you are paying it twice in a month, if you can't pay it all at once. But you live on that. Your business itself should have its own survival budget. What it means is that plan what the expenses are. And then anything that is not in the plan, as long as it's not an emergency, it needs to be carried forward to another time. Okay, so people should know in your company or in your organization that they just can't come and start asking for money willy-nilly. It needs to be planned. Receivables management, we've said that already. Convert your sales to profit and then ultimately to cash. So you need to convert your sales and your profit rather to cash. Okay, ensure that your customers are paying you on time as much as possible. Payables management, yes. So we earlier on when we looked at the balance sheet, we talked about when you get a credit alert, is it just for you to spend on whatever you feel like? No, this is a question you need to ask. Whose money is it? So if I look at my financial statement, I see that, oh, I'm owing suppliers about 1.4 million. So I better go and start clearing off that liability. Then here we advise that you avoid diversion pitfalls. If you are giving money to buy goods for your business, please don't use that money to buy yourself a second-hand car. And yes, it's true that you deserve wonderful things because you are stressing yourself out in business. But you see, if you eat up your business, there will be no business. That's just the truth. You need to keep prioritizing your business in such a way that it can continue to exist, even long after, maybe you want to hand it over to someone else. Okay, so please, let's keep all of this in in mind. All right. So I'm going to invite Abigail right now to just talk on a few things. Okay, Abigail, first of all, do we have anything in the chat box?
No, not we only have answers for the previous questions.
Previous questions. Okay, fantastic.
Yes.
Okay. So thank you all for staying so far. In the next few minutes, I would like Abigail to just answer some questions regarding taxation. But Abigail, before you do that, could you just introduce yourself to us?
Okay. My name is
Your name, your company, and yes.
my name is Adeakin Abigail. I work
Yeah.
for I work in Becky Roberts and Co as an audit trainee. So I'm here to answer any tax questions.
Okay, thank you, Abigail. So at the beginning, when I introduced myself, I said I started working, my first job was actually in Beckley Roberts and Co. So that's where I cut my teeth. The MD, Ayo Roberts, couldn't be here with us, but Abigail has been with them for a number of years, dealing with taxation and all of that. So Abigail, please, a few questions. First of all, what would you say is at what point does a business actually need to start collecting VAT, which is value added tax?
Okay. Immediately the company starts issuing out invoices to their customers. That's when you get to charge your VAT, and then immediately you remit it to the relevant tax authorities.
Okay. So it means that once I start business and I've started engaging customers, I need okay. I think that's clear. Please, if we have any questions related to what Abigail is saying, please let's also put it in the chat box. Okay. So when is the due date to actually remit VAT?
The due date is actually the 21st day of the month that comes after the month in which you have charged your VAT. Take for example, if I issue an invoice to my customer, let's say in February, so and I've charged my VAT already, so I'm going to remit that VAT on the 21st day, on or before the 21st day of March 2021. So basically,
Okay.
the 21st.
So if I don't do that, what happens?
Well, there'll be a penalty on it.
Mm.
There'll be a penalty that's 50,000 naira for the first month of default, and then 25,000 naira for subsequent months of default.
Interesting.
Yeah.
Okay. All right. Thank you very much for that. Now, business owners who have employees, okay, what kind of tax do they need to be dealing with for the employees?
It's called payee. That's the pay as you earn.
Okay.
When you get to deduct it from the salaries.
Okay, so the pay as you earn tax, who gets it? Is it the federal government or the state government?
It's the state government that gets that.
That gets the PAYE. And then can you advise us on when the due date is for remitting that as well?
For the payee, you must pay on or before the 10th of the month following the month in which you paid those employees' salaries. So take for example, if I'm paying my employees for February, I must have deducted my their payee in February. So I'll remit it to the relevant tax authorities on or before the 10th of March.
Okay. All right. Thank you very much, Abigail. That's most appreciated. So I mean, we've come like to the end. I don't know if there are any more questions we might want to ask. I am very grateful to all of us who participated. Thank you so much for joining. And like we said, we will make it available to you. You can connect with us on any of this medium. That's our phone number, email, and our social media handles as well. And we'll be looking forward to hearing from you and see how we can support you in your business journey. So it has been wonderful. And my name again is Jovita Madojemu, and I am the founder of Pundit Bookkeeping Services Limited. Thank you all so much. And I will just say, have a nice rest of the day. We hope to interact with you outside of this webinar platform soon enough. Okay. Thank you, everyone. Thank you so much. Thank you. Okay. Okay, Sonia is asking the question. Okay, well, final one. I did not quite get the explanation of the VAT. Could you please go over that again? Okay, so for Sonia's sake, Abigail, can we just quickly do that before I sign out?
Okay. I said for the VAT, I said you remit it on or before the 21st day of the month following the month in which you have deducted the VAT. So I said, okay, if I'm issuing an invoice, maybe I issued an invoice to my customer, I must have charged my VAT. That's the VAT they're supposed to pay. So by the time they now pay me the money, I'm supposed to remit that VAT element to the necessary tax authorities on or before the 21st day following that month.
Okay. All right. Thank you for that. I think Eliwe is asking the implications and position of minimum tax. What does it imply? Is that something you're able to deal with, Abigail? Minimum tax. I'm not so sure I get the question anyway, though.
No, I don't get the question either, because is it for...
But what we know is that for VAT, there is no minimum. You must pay, even if it's a 10,000 naira transaction, you charge your 7.5% on it. Okay, that will be what, 750, and then you remit it, you know. Okay, but minimum tax, Abigail, I think, yeah, it will be on the payee computation. Well, probably you need the payee schedule, then you'll see that clearly, Eliwe John. So maybe after now, you could reach out to us and then we'll probably send you the PAYE schedule. It actually computes minimum tax and all of that. And then that might be clearer to you. It might be better to see it, you know, on a schedule rather than trying to talk through it. That's what I think. Okay, in the absence of any other question, thank you so much, everyone. Thank you, Abigail. Thank you, all our participants. And thank you, Kenanville Digital, for helping us, supporting us in, you know, facilitating the platform for the webinar. We're most grateful. And we hope that we can do this again some other time. Somebody was saying we should do it monthly. I don't know, maybe quarterly. So please, once we put up the link, we'll ask that you know, share it with your friends. So we watch out on our Instagram page, and we'll be sharing that link with you, so you could go back on YouTube and play it. All right, thank you so much, everyone. Enjoy the rest of your day. It has been wonderful. Have a nice rest of the day. Thank you. Thank you. Thank you.
Hi there, my name is Jovita Madojemu. I'm the founder of Pundit Bookkeeping Services. Pundit Bookkeeping Services is a company working with business owners to actualize their financial dreams using intelligent accounting and reporting. Now, if you're a business owner and accounting is a headache for you, if you're looking to measure your business performance reliably, and you're also willing to cooperate with the accounting process, then we are the accounting partner that you need. Why not take action today? Call us on 0802 354-3997. Visit our website, punditbookkeeping.com, and you should also follow us on Instagram at PunditBK. Let's start accounting for your business today. Hi there, my name is Jovita Madojemu. I'm the founder of Pundit Bookkeeping Services. Pundit Bookkeeping Services is a company working with business owners to actualize their financial dreams using intelligent accounting and reporting. Now, if you're a business owner and accounting is a headache for you, if you're looking to measure your business performance reliably, and you're also willing to cooperate with the accounting process, then we are the accounting partner that you need. Why not take action today? Call us on 0802-354-3997. Visit our website, punditbookkeeping.com, and you should also follow us on Instagram at PunditBK. Let's start accounting for your business today.